Hi, dreamers. I've covered this topic in the past, but I haven't done it in quite a while. And the question is, why am I so obsessed with dividends? Why not focus on total return or growth stocks instead? And so today I'm going to answer that question and talk about the power of dividends. So a place I wanted to start was right here at this graph. And essentially it talks about the power of dividends, looking at the growth of $10,000 from 1960 to 2023. And here you can see the hypothetical growth of $10,000. Looking at the S&P 500 index total return with reinvesting dividend versus the S&P 500 index with no dividend reinvestment. And you can see the drastic difference of the results. With no dividend reinvestment, you've got $796,432 as compared to $5.1 million. You like the way I say that? $1 million. Delicious. But then you might say, Dream, you can't pull the wool over my eyes. I'm a smart investor, and I know that the dividend contribution to total return has drastically gone down by decade. Where you can see 1940s, 50s, 60s, 70s, there was a much higher percentage as a contribution of total return, and that's really gone down over time. Well, what's interesting about that is that companies actually de-emphasized dividends in the 1990s. But after the dot-com bubble burst, investors and companies started turning their attention back to dividends and buybacks. So right about now you're thinking, okay, we just saw a graph that was showing from 1960 on. What if we looked at a graph that was more current? Okay, so here's one looking at the potential return of $1,000 into the S&P 500 in 1980. And the green line shows the S&P 500 with dividends reinvested, as opposed to the line where dividends were not reinvested. But I wanted to do one better for you, because look at the drop-off after the 1990s. Okay, let's look at this recent article on Charles Schwab. And here they use some interesting graphics to show a hypothetical $100,000 investment made in 1990, tracking the S&P 500 and showing that the result is more than $2.1 million by the end of 2022 with dividends reinvested, but only $1.1 million if they were not invested. And this whole article talks about how reinvesting your dividends can really boost those overall total returns. So let's take a look at this rather goofy little graph. So let me try to zoom in on this little thing. So in their, I guess, mountain climbing motif, you can see 1990 with their hypothetical $100,000. And the yellow represents with dividends reinvested, and the orange represents without dividends reinvested of the S&P. And you can see over time, as we go to the end of this, that the result is $2.155458 as compared to about $1 million without dividends reinvested. And what you've probably noticed in my own dividends being reinvested is that the recent explosion in my income is exactly what you see here, with the compounding effect really taking hold in the last few years. And the reason why I'm showing you this kind of weird, kind of blurry graphic is that I actually love this little tent thing at the bottom where it shows sector differences of the total return versus the dividend return. And it's kind of interesting. So you can see the overall S&P here with a total return of 12.55% as compared to the dividend return of about 2%. Then we've got Infotech with the total return at about 18% and the dividend return at an average of 1.4. Healthcare at 15% and a dividend return of about 1.7. The financial sector at about 12% and the dividend contribution is about 2%. Same thing with industrials, 12% total return and 2% dividends. Consumer discretionary at about 11.75 and 1.3. And this is kind of a nice balance of utilities at 11% total return and about 3.5%. And that continues down consumer staples, materials, real estate, energy, and communication services, where although we know that communication services stocks like Verizon, AT&T, BCE tend to have a higher yield, they haven't performed overall in terms of total return. And so I show you this funky little graph just to sum up the main points, which are, of course, total return is the focus of any investor. But the reason why I'm so obsessed with dividends is because with dividends reinvested, they're effectively buying fractional shares of that stock every single time they pay out, whether that's quarterly or monthly. And with those dividends reinvested, you get the potential of compounded growth, both of the dividend increase, the stock price, and the future dividend payout for years and years to come. And that compounding effect results in significant results, especially in the last 10 or 5 or even 2 years of your investment journey. And guys, it's significant once you see that avalanche starting. So I hope that was helpful for you and a little bit of a reinforcement of this strategy and why dividend investors are so dedicated to this strategy. Now, I'll leave you with this. I don't know who created this graph at Charles Schwab, but it really kind of reminds me of this.
Keep that mountain climber from falling off that cliff at the top of the mountain. And if you know enough about the prices of these 3 prizes, you'll be safe. What are those 3 prizes, Rick? 1 step for every dollar you miss the prize. Is that right? No, and the audience moans, so let's see. How much did she miss? The audience seems by a lot. 20, 21, 22, 23, 24... And he stopped.
So, do you have drip turned on? I hope so. Let me know what you think in the comments. Well, that's it for today. I hope you enjoyed this dividend income update. And if you want a richer, real-time experience with me, you can always follow me on Instagram or X. And if you're doing your own research using Seeking Alpha, feel free to find the link below to subscribe if you want, no pressure. As always, I encourage you to do your own research, then implement and learn by putting it into practice. And as a reminder, I'm not a financial advisor, so keep in mind these videos are for entertainment and inspiration only. I'll see you on the flip side.